Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at technical charts and I try to understand what happened in the market during the day and also plan for a better trade for the next day. That's for March 1st, Friday, 2024, tomorrow. So we had some kind of bounce that came in today after a big fall yesterday. Let's try to analyze and answer if that's a dead cat bounce or is that a bounce that will sustain. Let's try to understand that. If you're not subscribed and watching this, please subscribe and share it to friends and colleagues so that it reaches out to max. Thank you. So here we have the market wrap up. You can take a screenshot. They accept the institutional data. Other things are updated because institutional data is not coming in because I'm recording it early. So before we come to the wrap up, we would first try to look at the charts and see what the candlesticks are saying. So look at this. So I think it will be more clear if we look at this charts daily here. So let's see. This is a spinning top actually. It is not a harami because it's not completely inside the previous candle. So it's not a harami, which could have been bullish. Neither is a piercing pattern because it did not move above the 50% above the previous candle. So it's mostly a spinning top, but it's not a spinning top that is having any significance because it's not exactly the top of the rally. If it had been in the very top of the rally, it would have been bearish in nature. So it's basically a small body which is indecisive. So it's an indecisive close, a bounce up after a dip. And Banknifty also, it's not a piercing pattern, not a harami. It's a small body bounce up, but a slightly bigger body than what it was in the Nifty. But the wick size equally on both sides, that's seen on both the candles, indicates the kind of intraday volatility that came in. So if you look at the 5 minutes, you'll understand that. Look at the bull bear fight that has happened today. So it's went up, down, very volatile. It is actually range bound, but range bound in a 200 points range in Nifty. But it went very volatile and did dip and then got recovered and then gained something in the last 1 hour. Banknifty also was very volatile. It did better than the range bound, but initial fall was bottom and it was trending up. Actually, it was Banknifty which was more showing better performance than Nifty today, but it was very volatile. Look at these moves. Half an hour we had a recovery, but just for the last 1 hour, but the mid afternoon, we had a V shape, small V shape, which itself is some 400 points. So it is a very good recovery, very volatile. Banknifty and Nifty range bound, very volatile, also doing a recovery, and recovery indicates the bounce that has happened from the bottom. So that was the kind of move that is. But otherwise, if you look at the candlesticks, where are we? So yesterday's fall, 20 exponential moving average was lost. It is regained now. We managed to close below that. Otherwise, we are trying to move up the top of the channel, well within the trend line channel. Where did it bounce today from? Look at this. It bounced exactly from the place where we had 22nd of February. We had a dip. Exact same place it took the support and dip. So this is a consolidation zone, right? And it is not ready to fall below. Is probably what it may be indicating if the price is moving above today's candle. Right. Banknifty did a bounce up from the 100 exponential moving average today. So basically, it had stopped at the edge of the blue channel from where it had fallen down multiple times earlier and managed to close within the channel itself without falling into the yellow channel. But it still could not manage to close above the 20 exponential moving average. But it managed to close above the 50 and the 100 exponential moving average. The bounce came from the 100 exponential moving average. Right. So if the previous swing high at 47,400 is cleared, then we can hope for the price to move on the top of the blue color channel. Right? That's what we have to look forward. The W pattern neckline has breached yesterday, and once it had fallen down. But we'll have to see if the W pattern, if it can still work or not. We'll have to keep a watch on that. The lower low, lower high pattern was negated with after having made a new swing high here on 21st. And if today's low is a higher low, then if it can move above the previous swing high, then the pattern, price action pattern is still positive. Right, that's what we will look at. So let's look at the support resistance levels. We have the 22,300, which is the all-time high. So the first resistance would be to retain the 22,000. It could not close above that today. It was an expiry play, so a lot of volatility and reasons are there for this. So we'll have to watch tomorrow if it is to close above the 22,000, which it had lost yesterday. So that's the first resistance, and after that you have the 22,300 nearby zones where the all-time highs are there. And then you can go way up to 22,600 to the top of the channel. That's resistance. All the interim hundreds would be resistance in the upside. Downside, the first support would be the 20 exponential moving average, which is at 21,964, and then the 100 exponential moving average at 21,625, and then the Fibonacci 23, the retracement level at 21,500 nearby. Right, and then the previous swing lows at 21,150, and then 21,000 rounding number, and then a gap also comes at 2950 there. So that's support from the Nifty. Banknifty, the first resistance would be to take out the Fibonacci 23 at 47,000. But before that, it has to clear the 20 exponential moving average at 46,300. It could not manage to close above that. So that's the first resistance. Then all the way to 47,000. Then 47,400, which is the previous swing high. Above that, we have next the gap at 48,000 and the rounding number also there. After that, all-time high at 48,600. Downside, the first support would come in at 50 exponential moving average, which is very close to 46,300 nearby zones, 250 that range. Then 45,800. Before that, 46,000 would be a major support. So 46,000 is a major support. Managed to close above that today. Right, and then the 50 and the 100 exponential moving averages would also come in handy. And then the 100 exponential moving average at 45,800 also will come in support, and 200 exponential moving average at 44,850 will be the next stop. If the previous swing low is 44,400, if that is breached, then we have serious trouble. Everything turns to be bearish from then on, because by that time it would have breached the 61% Fibonacci retracement as well on the Banknifty. We're talking about Banknifty levels. Now that you have seen the support resistance level, just quickly go and wrap it up. So to the volatile bounce day, a positive close with 32 points flat. Nifty could not manage to close above 22,000. It's a 32% rally and a 4.5% max retracement happened, but it closed about the 20 exponential moving average. Banknifty had a volatile bounce, closed green, much more positive than Nifty with 0.34. It's 158 points up, and it's an attempt to recover from the 8.5% of retracement and managed to close above the 46,100, but it could not close above the 20 exponential moving average. Remember, it had a 26% rally and an 8.4% from Demat Account. Intraday price action was very volatile in both indices. It was a monthly expiry day, and with we had already seen that it had a dip and a recovery, and Banknifty did Did more than the recovery, but could not manage to close with a candle that's bullish enough. Institutional sellers, Fyers were sellers and DIs were buyers. Yesterday, as of now, today's data has not come in. We will try to quickly check if it has come in or not. By now, not likely. It's only 5:20. So, institutions of Fyers have been selling mainly since quite some time. And then probably this entire February they're selling. But domestic institutions were buying. And that's a worry that if Fyers are not turning into buying, right, and then we have trouble for the market to sustain the levels. And the selling is mainly happening in Banknifty and HDFC primarily. It has got a bigger percentage to the banking index and the Nifty index as well. So that's where the trouble is. That's happening from the FI side. Now, resistance levels on the upside, supports for both indices we already discussed and seen. I'm not repeating that. You can make a note of this. Momentum has slipped sideways yesterday and remains there, but it's rising up on both the indices. Trend has crossed over to bear zones yesterday on the short-term daily charts with the rising strength, and it continues to be there. Nothing else. So the sideways momentum and the bearish trend on the short-term continues to be as it is. We had some big cool off today after the monthly expiry, 4.6, 15.57 now, but it's about 15 and was hitting about the 16.3 and all that. So it's climbing towards the 20 levels, and you will be extremely cautious, and it would continue to happen until the directions are complete, right? So VIX is going to spike up, volatility will be there. You have to be aware of that. The market behavior, option strategies, and option price behaviors will be accordingly totally different from what you might have been experiencing in the previous year or a couple of years. Orange bands are contracting as of now. It's showing sideways, potential sideways move is what it's showing, with bearish bias on both. Probably bullish bias on the case of Nifty as of today, but otherwise sideways movement is what orange bands are predicting. So technically the charts say that the markets have lost the momentum and continue to have lost momentum in the trend. The W pattern, which was supposed to have given a double target of the height of the W, is no longer valid until it seems to be negated as of now, and we'll have to see if that managed to close above the neckline once again. It was negated yesterday when it fell below the neckline. So the lower low, lower high pattern was negated in Banknifty. It continues to be fine as long as it does not go down to retest the previous swing lows. It still could not manage to close above the 20 DMA, and we have 2,500 points again to make a new all-time high on the Banknifty. So there's a lag behind there. So today's dead cat bounce, is it a dead cat bounce or not? We cannot rule it out. We probably maybe a dead cat bounce. We'll confirm only if it sustains to manage to close above the previous candle day before yesterday's big red fall. If it managed to climb above that, you can say that's not a dead cat. Otherwise, it could turn out to be bearish very fast. More corrections could come in. So that's the answer for whether. But looks like it's a weak bounce. At least you can say it's a weak bounce. It's not strong enough considering the kind of fall we had day before yesterday. So if you could see the major sectoral indices, it is a green territory except for the IT. IT index was slightly red, and if you analyze the daily charts of the sectoral indices, the auto, pharma, and reality still shows bullishness with respect to the momentum on the short-term charts, while the metal, FMCG, IT are on the sideways momentum. None of them are in the bear zone set. So across the sectors, we still okay with the majority of the indices leading in the bullishness, and some others are trying to catch up in sideways. But heavyweights, we had a green close today, except for HDFC and TCS and ITC. Those stocks we closed red today. The thing is, none of the heavyweights are having bullish momentum. So the sell-off is happening in the heavyweights. That's why we are having trouble on the index. Reliance, ICICI Bank, TCS, INFI, they all made in the sideways, and we have three big stocks: Kodak Bank, HDFC Bank, and ITC, which is pulling the markets down. And that's in the bear zones. Continue to be there, continue to be there in the bear zones and today as well. And that's what is causing the problem. The heavyweight that constitute maximum to the indices are not in great shape, although we have a green close in most of them today. So the US indices are kind of flattish, consolidating. Some Dow Jones slight red, slight green, S&P and Nasdaq. So it's consolidating. It's at the very top. It has been rallying since quite some time, and we have to be cautious. Some retracement could come in some other market. It could reflect in other markets also, not necessarily always, but it could. The probability is there. The dollar is showing some red at 103.9. Rupee has spiked up slightly. US dollar has spiked up slightly, but rupee remains to be as weak as before 82.9, controlled by the central bank since several months, 17 months or so. Also, crude oil is spiking up it's at 78.2, and it seems like it is trying to head towards the top of the trend line channel. We may have some worry if it spikes up and breaks out of that for some reason, because we are an oil importing company. The gold, for some reason, is consolidating at the top. It's not ready to fall down after having made all-time highs a couple of months back. And that's a worry as to if it's good as a hedging instrument. Gold is spiking up for long-term investors and hedge portfolio hedging. It is fine, but it gives a clue that probably money is getting shifted from the equity to more safer haven instruments like gold. So it's something that you have to keep a note of. But it's consolidating at the very top. That's what you have to keep in mind. So every time we have dips like what happens yesterday, that may be giving an opportunity for us to invest in quality stocks which are not overpriced or not run too much. Quality stocks in SIP mode. For every dip, you do this SIP. In SIP mode investment is return, not in bulk. Because you never know how much more it can fall, right? So as a trader, what matters is the direction. The direction is not clear, absolutely not clear. Banknifty and Nifty has got a huge difference, but directionally we have some uncertainty, and both the time frames, both the indices has to be above the RSI 60 for us to be completely clear that the trend is up. That has not happened since long, and until then we may have this choppiness and then making something one day and next day losing more than that. So I'll be cautious about that. So non-directional helps in that aspect as well as in very OTMs. But the realized volatility, blind volatility, the spread difference is still not in favor of the option sellers. Keep that also in mind. That's why I said very far OTMs, probably non-directional plays could still help us to survive. Tomorrow is a Friday, a week, new week begins, and that may be the time when Nifty Banknifty options weekly push and non-directional trades can be taken because some premium may be there, better premiums may be there if you're in option selling primarily. So that's all I have. If you're not subscribed and watching this, please subscribe and share it with your friends and colleagues so that it reaches out to max. Thank you, and happy trading, happy learning, happy investing. Play safe. Bye.